I don't want to like drag this too much, but it is like 5:11 in the morning, and I've stayed up all night, and I literally have zero sleep. But yeah, basically this strategy right here, it works. Okay, so first of all, this is the strategy. Okay, so you can see that over here, first of all, you want to just obviously want to pay attention to the mitigator PD arrays and the drawn liquidity sweeps. Now what I mean by this is, let me just quickly define what this is. So let's say there's candles right here, right? So let's say over here, right? So for example, like how do I explain this? So let's say this PD arrays, like for example, you'd say you see this manipulation happening off this. Let's say this was like a fair value gap, okay, unmitigated fair value gap, and then you see this, right? But then what happens is, like especially in my case, when I have had, let me actually go to the charts so I can make this better. But over here, let's say this was the candle, okay, this was the fair value gap, okay, this is basically the let me just drag this a bit. So this is the fair value gap. Let's say this was like a third candle, and this is the the first candle of the fair value gap, right? So think of this as if this was a mitigated unmitigated fair value gap, okay? So obviously it's basically ranging from here to here, okay? You get the point. So basically, obviously, like at some point, price will, especially like let's say you were using 15-minute for, let's say this is in the 15-minute, right? 15-minute, technically it's a PD array, right? So basically, let me show you guys. So 15-minute. So basically, think of this as the 15-minute, okay? So in this case, right, this is something that I was doing wrong many times, okay? So basically, in this case, for example, like sometimes you might see, like let's say this is a another fair value gap, right? Oops, my bad. Anyways, just imagine as if these are just like two lines which are from here, and like basically this, right? So this manipulation right here, right? This manipulation, this can be like, how do I explain this? Like this, like for example, like there could be another like another draw towards the same area, but what I've gotten confused with is the fact that this right here, this fair value gap is mitigated at this point because it has been wicked in, right? So because this wick has wicked into this fair value gap, so this is completely invalid. The reason why it rebalances over here, sometimes it even makes equal lows, right, is because there's liquidity right here, this swing low, it's rebalancing this swing low. So you want to pay attention to that, because this is something that I got induced a lot, especially right here. And you also want to pay attention to equal lows, because equal lows sooner or later always needs to be what, relative equal lows, and equal lows like you need to be rebalanced. For example, let's say this is let's say somewhere here you see equal lows, something like this, okay? The candle could be like slightly lower even. Basically what I'm saying is, let's say this was the candle, okay? So you see over here, like obviously in this scenario, I'm expecting price to sweep, right? Sweep below these equal lows, and that's when I have the confidence to actually take this price to this drawn liquidity. Okay, so please do not make this mistake. Equal lows are something, because here's the thing, right? There's resting liquidity right below this, right? There's a lot of orders from this area, so price obviously needs to like price might like fake out and just try to like make it seem like we're going bullish, but in reality we're supposed to sweep this liquidity and then go higher. So please do not take equal low trades, because there's going to be resting liquidity right below. So basically this right here is the manipulation, and we're going to be going towards the distribution, okay? The distributing towards the swing high, okay? It's simple as that. So basically that's what I want to show you guys. Apart from that, basically you just want to be pay attention to like the sweeps above. Like for example, the sweeps above, like you could zoom out to something like the 4-hour and see what which like draws we're drawing towards, right? Because this could be like a rebalance. Let's say this was like a drawn liquidity level, and then this could be like a rebalance manipulation with this equal lows, manipulated, and it could draw towards higher and higher and higher, and eventually catch towards like whatever the highest long-term high is, right? So yeah, that's basically what I want to show you guys. Also pay attention to kill zones, right? Kill zones is in 8 a.m 9 a.m all these like NY time, by the way, like all these kill zone timings. You guys want to pay attention to those. So in the 4-hour, right, 4-hour, don't overcomplicate it. Just look at the 4-hour chart and think, okay, are we bullish or bearish? Okay, currently in the current price range, we're bearish, right? We're bearish. So basically that means we're bearish, okay? Like unless we have a specific situation like this, okay, even in this scenario we're still bearish, right? Because this 4-hour, like even though if you zoom out, you can see like there's obviously like these long-term highs that need to be rebalanced. This has been rebalanced though, but still, like even though this has been swept, like obviously we need to go at some point, we need to go here, right? But don't conflict this like this move right here up to this point, this long-term high, with this move, because this is the current dealing range, right? So you want to just zoom in, okay? You want to pay attention to those, obviously, because you know it should be at the back of your head, but you don't want to prioritize that, right? You want to just look at the overall structure of the market. For example, in the 4-hour, right? Because this is in my case, this is my high time frame, okay? So I use 4-hour, 15 minute and 1 minute, okay, 1 minute for my entries. So as you guys can see, obviously it's breaking structure towards the downside, right? So unless I see this high being broken and then like market structure like going in the opposite direction, we're bearish, okay? Don't get that confused. For example, this high needs to be broken in order for me to really think this is going this is going bullish. Exactly. So basically in that case, what are we? Bearish. Exactly. So we're bearish, okay? So you don't want to like be bullish in a market. I mean, think as if like because we got draws above, we will eventually like go bullish. We will, but it's not right now, okay? So now that we have that, right, you want to just like, okay, let me just note this down, okay? We have a 4-hour which is bearish, right? So 4-hour is obviously bearish. So now what you want to do is go on to the 15 minute and you want to see what the dealing range is. Now, mind you, if there's no swing properly made, right, obviously in this scenario, as you can see, these lows have been swept and these are relatively equal lows. So as you can see, this is the sweep that takes out all these relatively equal lows over here in this range. So as you can see, price has been rejecting this level. There has been a lot of orders in this area. So price is now taking those orders out, right? So obviously in this kind of situation, as you can see, like over here, this displacement, like for example, if you guys pay attention to these wicks right here, these wicks indicate the fact that there's like a lot of price rejections happening in this area because there's a lot of manipulations and sell downs, right? Which means if I zoom out, right? If I zoom out, which side do I want to like be in? Obviously not bullish, because you see these wicks have been manipulated. All these wicks, this whole area is a rejection zone, right? So the one thing that I want to do is TP towards a swing low, okay? I could TP towards this or towards this. So once I see that market structure shift on the 1 minute, that's when I'm going to use this to go lower, okay? So as you guys can see, this is the basically it broke this low, right? It broke this low right here, and then now we're going to have the market structure shift pullback, right? If it pulls back somewhere here, right, over here, and then I'm going to target these lows, right? These lows as my drawn liquidity. Let's see how this plays out. No, okay, that's okay, that's okay. Gotta have bad trades too, but still, okay? So basically with that, with those rejection of the wicks, right? Rejections of the wicks, you can see that basically the displacement is getting ever so small in this area. Now that right there was an unfortunate situation, obviously, but here's the problem with that, okay? That's one thing that I didn't consider. Now in this situation, obviously, like we had sell-offs, right? But in this situation, the one thing that I did not consider is the fact that we are overall supposed to be bullish, right, after rebalancing this. But even though price did reject this area, right, overall it was supposed to, because it swept this low, right, these equal relative lows have been swept with this, right? So obviously, like, even though I kept rejecting this price and I thought the bias was going to be bearish, it did go bullish. Why? Because you see this one candle, so now you don't want to be bearish, because you see this candle, obviously there's a lot of displacement towards the upside, right? So you can expect price to go towards, at least towards this exact point that I'm pointing, because that's the low of the order block. Okay, this exact area is where I'm expecting to get out of the trade from. All right, so the first thing that I want to see here is a market structure shift. Okay, so on the 1 minute, what I'm going to do here is look for a market structure shift. So as you guys can see, where is it? Yes, over here you guys can see that there is a market structure shift over in this area. Again, one more thing about market structure shifts: you don't want to look for wicks. Okay, you don't want to look for wicks. What you want to look for are these candles closing above. Okay, so basically once you have that market structure shift, you basically have this, you TP somewhere here under the swing low, and you can stop loss somewhere under the swing low, and then you want to take this all the way towards this order block. You see this order block over here, this order block right here. So you can see this order block right here, you take it towards that. Let's see how this plays out. See, price goes and tags it right there, and then it goes lower. See this manipulation, and then goes lower. So yo, what's up, Khalid? Yo, how's the trade? Best trader now. Far from it, but yes, eventually I'll get there. Rejection wicks, once again, rejection wicks. Okay, thanks, man. You keep up your coding grind, because I see you grinding the You know what I'm saying? The development, you know what I mean? So right here, these are the rejection wicks, okay? So the rejection wicks basically indicate the fact that price is being rejected in that area, okay? This area right here, as you can see. So you can see there is another market structure shift over here, right? This has been closed through. And if you see this pullback entry, if you entry over here and right here, if you put the stop loss a little bit lower and you put you take this towards the previous draw on liquidity. So as you guys can see, there is a pretty good imbalance over here. So the only point that I because I see this, right? Because I see this. All right, see you, man. Thanks, man. Okay, bye. Back to CSS. Yes, sir. You gotta grind. So let me know if you have any questions about CSS, by the way. So learn Tailwind CSS after that, by the way. Tailwind is a little different because it's like class name, involves class names, but you'll get there, don't worry. So yeah, so as you can see, it rebalances price. So it basically tags us into the trade. So if you guys can see this, so you can see, let me get rid of this like external because it went and hit. So you can see this tags us into the trade, right? At this point, we are in the trade basically. Let's see what it does. Oh no, that was a bad trade. Okay, that was a bad trade. Okay, it's okay because we will have bad trades, we will have good trades. It's okay, as long as we manage our risk, obviously. So as long as we're in the greens, for example. So what else do we have? Yeah, so always candle body close market structure shift. Like I mentioned, you don't want to see a wick market structure shift. Okay, if I see any of you guys using one of the wick market structure shifts, I'm gonna whoop your ass. I'm just kidding. But yeah, you get the point. Like you don't want to use any of these market structure shifts which are wick market structure shifts. An example over here, see, this is a wick. So this is not a market structure shift. In fact, this is a manipulation, which means there is a rejection upcoming, right? Over here, as you can see, price just rejects, right? That's exactly why you lose the trade. Okay, it's as simple as that. The displacement needs to be there. You need to see market volatility. If price is not saying, oh, we're going there for sure, these wicks indicate the fact that we are having a manipulation at the top, and then we're basically distributing towards the downside. Now, if you had your stop loss here, you would have saved that, right? But obviously, you don't want to be like, under the mercy points of the thing, right? So obviously closest 15-minute drawn liquidity, TP up to order block level. What I mean by this is, for example, what I do every time I trade, right? I mark out the order block and I TP below, like right here, where I'm going to be drawing this line, right here. This is the exact point where I TP. The reason is because this, like over here, sometimes when you go towards the order blocks, it manipulates. Now, regardless of like the fact that we have a swing high over here, like if I take this out, you see a swing high over here, right? But like even though like sometimes it just like pokes and then it goes lower, like I don't want to take it all the way there. You know why? Because this in itself, the purpose of the order block is to be a supply level, right? And a supply level is a point where we see what manipulation exactly. So we could see some sort of manipulation, and so I've had times where price just retraces all the way back to my stop loss. So at that point, you just like lose money, right? So you don't want to be in that type of situation, obviously, right? So that's why I TP underneath and up to, as in like underneath, right underneath the body level of the order block. Okay, put SL before yeah, this is also true because you don't want to, like, let's say for example you were about to entry somewhere here. You don't want to put this here. Also, you see over here, the reason why we got liquidated in this scenario is because we had equal lows, okay? Relative equal lows or equal lows. So equal lows is in, it could be like parallelly in the same level, or relative equal lows like this, okay? I'm pretty sure you guys understand what that means. So right here, as you guys can see, you can see these relative equal lows were not properly taken out actually. So you can see this is a fake out, okay? You can see price goes and takes you out, boom. Okay, so once we see a market structure shift here, that's when we can really entry. For example, let's say over here, let's see. Okay, so as you guys can see, oops, my bad. Okay, there we go. So as you guys can see, there is a high, okay, swing high made over here. So you guys can see this is a displacement, okay, displacement leg. So you can put your stop loss below, okay, below this leg. Below, okay, below. You do not put it right here, okay, do not put it right here. I've had countless experiences where stop loss just goes here and then goes up, okay? So you want to put it below, yes, below, okay? So now you want to go towards the 15-minute and just go towards the draw on liquidity. For example, this is an order block, clear order block that we see here. So I will TP right here, okay? So now out of this trade, I get a, what, 3.5. 3.6 out of this. That's pretty good. So let's play this out. Boom, just like that. Okay, so it's pretty simple once you guys get the idea. So put SL, like I said, right, below. Okay, below. Right. So basically, rejection wicks, like I mentioned, rejection wicks mean manipulations over here. As you guys can see, this is a rejection wick over here, right? So these kind of things, like if you see, like for example, you will also want to observe the displacement. For example, like let's say there's so many candles. For example, this is like slow compared to this move. Like you see, there's a lot of selling pressure compared to the buying pressure because it's taking so long to go through, go higher, right? But like in this case, you see, there's a lot of selling pressure. But then in this case, it's struggling to go higher, right? It does go higher, obviously, to rebalance, right? But in general, it is struggling to go higher, right? So you see there was a lot of consolidations, it made a lot of equal lows, manipulated it, and then now we're going to be bullish for a while until we balance this area right here, this supply level, okay? So pretty much what I'm saying is, over here, as you guys can see, sometimes indicated by wicks, exactly. So displacement, so as you guys can see, it's over here. So this is the rejection on the 4 hour. So obviously if you look at the rejections on the 4 hour, you can understand how the market works, right? So you guys can see that there is a lot of rejections from the upside. So as you guys can see, if you look at all these wicks, you see all these rejections from the upside. So that means price is refusing, right? But there is momentum. For example, like in this scenario, you can see that over here, like all these, right? There is momentum. For example, like if you look at the candles, like for example, this candle compared to like these candles right here, these are shit candles compared to this one right here, right? So like if I point this out, this candle is like super compared to these, right? So obviously that means the sellers are slowly starting to lose the tug of war, right? So obviously like now buyers are slowly starting to get to take control, which means I'm going to anticipate the fact that there's going to be sellers sooner or later in the market. Okay, so that's what I want to mention over here. Okay, that's pretty much what I want to mention for you guys over here. Okay, pay attention to New York kill zones. I will get you guys exact timings. So there's a lot of different timings. Obviously we know about 9:30 a.m. but like, you know, we have 8 a.m. the 8 a.m. opening candle, 9 a.m. to 8 a.m. to 9 a.m. Candle, 9:30 to 10:30 the silver bullet strategy, and many things, right? But you don't want to just take silver bullet, right? 0.618 fib. Now this is an extra. Okay, this is an extra. So obviously this is not really extra, but this my friends, this hold up, my bad. This, my friends, is extra. Okay, you don't really need to know exactly if that's the case, but yes, if you look at this swing, right, this swing right here, this previous leg, right, you want to draw from, oops, my bad, you want to draw this fib from the swing low to the swing high of that specific leg. Okay, this leg of price action. So as you guys can see, right, if we look at the reaction at 618, obviously it's selling down, which means there's a high likelihood that it might complete this. Okay, so obviously give me a second, guys. Sorry, my bad, it's the other way around. So over here in this scenario, because we're shorting down, right, it's the 392. Okay, 618, that's the 618 the other way around. Okay, so 618 the other way around is 392. So basically, as you guys can see, the displacement's getting ever so smaller at 392. If you guys can see 392, this level right here, you guys can see the displacement getting ever so smaller. What does this indicate? The fact that we are closely about to go bullish. Look, after the sweep of liquidity, it just goes bullish. Look, it's drawing higher and higher and higher. And if you look at this, for example, right, this high has been broken. Oops, my bad. Sorry. So you guys can see that this high, this swing high, has been broken with this huge candle indicating displacement towards the upside. Even though we have sell-offs, right, we will see a price rebalance at this fair value gap. Now, as you guys can see, this was just a tap. This is not really a manipulation, but eventually it will manipulate and displace higher. So I'm expecting price. Now this is going to be the range where price pulls back and then reverses towards what it was supposed to do earlier, right? That is long-term high over here. Okay, simple stuff. Okay, simple stuff. As you guys can see, this is the example of rejection wicks on a higher time frame, for example, 4 hour. Okay, so as you guys can see, this is an example of what happens when you pay attention to 4 hour rejection wicks, as you can see. So that's something that I forgot to mention over here. So obviously we're on the 4 hour right now, and as you guys can see, there is a candle body. Okay, for example, this is the short-term high, right? So inter-term high, my bad. So as you guys can see over here, this high, right, this established high over here has been broken with a candle body, not a wick. I repeat that, candle body, not a wick. Okay, so obviously we pull back. Okay, we will pull back. Obviously this is like the current price in time, the current point in time. So anyways, guys, that's basically what I want to show you guys. This is my strategy right here. If you guys want to copy this, feel free to copy this. As you guys can see, if you want to just skim through, take a screenshot, or whatever you guys want to do. I have backtested this a lot, and I've done multiple live streams, backtesting this. And you guys can tell me if there's any flaws in this strategy as well. Thank you guys so much for watching. Always pay attention to the Asian sessions, like the different session-based liquidity as well, the kill zones and stuff like that too. So over here, for example, this is also shout out to GIFX for all the notes and stuff. That's how I built my strategy, right? So over here, as you guys can see, this is the Asian session. So this is something that you guys gotta sort of memorize, right? So this is during the Asian session, there could be accumulation. In that case, London might manipulate and New York might distribute. Okay, same way, if Asia is distributing, London might accumulate, and New York session might distribute. Okay, so this happens most of the time. Okay, so if you do see this happening, so Asian session is basically where you see if this is about to happen. Okay, either two of these scenarios. So these two are the only scenarios that you would see this happen. Again, this is AMD power 3 on a higher time frame. Manipulation happens below this. This is the kill zone candles, by the way. So this is the 8 a.m. candle, right? It manipulates the 8 a.m. candles low, and then it goes high towards the it takes the high of the 8 a.m. candle. Okay, this is in the hourly scale. So on the lower time frames, like the 15-minute and the 1 minute, 1 minute for entry, 15-minute, you see the market structure shift, and then you entry from here. Okay, and then you take it higher. Simple as that. Okay, so if you guys, again, these are the times over here. So this is all in New York time. So you want to like basically 9 a.m. is like, in my case, 9 a.m. is like 6 p.m. IST. Okay, so as you guys can see over here, this is also something that you gotta pay attention to. Especially I recommend using 4 hour, 15 minute and 1 minute. 4 hour for the bias, 15 minute for the PD arrays, and 1 minute for the entry. Okay, well, market structure shift and everything, you determine that from the 1 minute. That's basically what I want to show you guys. And yeah, that's pretty much it as of right now. This is the strategy. Again, I showed you guys what the strategy was. This was many different strategies, like frameworks tested out, and just overall just hours and hours of just trying to settle on a strategy, right? So eventually we did settle on one, and we back tested it, and it seems to be really good. So you want to always be attentive of the supply and demand zones. So this is supply actually, and you want to always be attentive of those kind of zones. So this is the theory that I was talking about. So as you can see, the 9 a.m. candle, the 8 a.m. This whole thing is the range of the 8 a.m. candle. So if you guys can see that, so this is the 8 a.m. candle. So it sweeps the low of the 8 a.m. candle, and then goes higher towards the high of the 8 a.m. candle. Simple as that. Okay, so these are the forex times. Once again, if you guys want to copy, this is right here. Okay, so that's pretty much it, guys. I hope you guys enjoyed. I hope this was good for you guys. I will let you guys know once again, always be attentive of supply and demand zones. One more thing, yes, be attentive of supply and demand zones. Okay, and be attentive of sell-offs and everything like that. So once you're good with that, you're pretty much good to go. Once you have confidence, you can backtest the strategy, obviously, and then go and trade. Okay, go and trade, get that money, and yeah, let me know if this works out for you guys as well. So as you guys can see, this is the again, don't be too attentive of the low resistance liquidity runs as well. Obviously it does need to happen. Obviously, you see over here, this long-term high has been rebalanced, manipulated, and you see this distribution like all the way towards sweeping all this liquidity. So I hope this is also a good example for you guys, and then it just shoots higher to rebalance this high. Okay, so it creates a high, creates some highs in the meantime, trying to manipulate all these highs made in the bearish leg, right? So yeah, that's pretty much all you so obviously in this scenario, do not involve over here. Okay, there's a high likelihood in any time frame, like whether it's 4 hour, 15 minute, 1 minute, you do not want to involve right here, right? You do not want to involve right here. You want to involve in one of these. So in this example, it's the 4 hour time frame. So you do not want to involve after the liquidity has been swept. In this is what I'm talking about over here. Okay, this is the zone that I'm looking at over here. Okay, this is zoomed in. So as you can see, do not involve here. There's a high likelihood price will go in the opposite direction and manipulate, because this is a heavy zone of inducement, right? It's an extreme level. So people are looking to, like, banks are always looking to just induce as many people and then just take them lower. Okay, simple as that. So I wanted to show you guys that, and that's pretty much it, guys. It's almost 6 a.m. where I live. And thank you guys so much to anyone that came by. Khalid, thank you so much for coming by. I wish you the best of luck on your coding journey, and I will reply to you, don't worry. And you can see these are the rejection wicks, so do not entry where there are rejection wicks. That's a bad sign. Okay, so sorry, not this, I'm tweaking. Like over here, you guys can see there's a lot of rejection wicks. It's consolidating. As you can see, prices like consolidating in this area, so you don't want to entry on consolidations either. Okay, if you don't see something that's clear, do not trade. Simple as that. Okay, so again, one more thing, I would recommend you guys to, this is more of a risk management plan. I would recommend taking 2 trades a day. Okay, 2 trades a day, and the ratios must be 1 to 2.2 minimum, or 1 to 4.5 maximum. All right, so you don't want to get anything above 1 to 4.5, because it will always lead to some sort of failure. Okay, so you want to make sure you stay on the right track. Apart from that, do 2 trades a day, so that way even if you do lose one trade, risk 1%. Okay, 1% per trade. If you lose, 1 loss equals cut risk in half. Okay, so basically 1% per trade. That's how much you risk in each trade, and each loss you cut the risk in half. That's pretty much it, guys. This is the risk management plan that I'm following, and this is what helps me stay on track. Okay, so you want to make sure you manage your risk as well. You don't want to get into drawdown. Okay, so 2 trades a day, 1 to 2.2 minimum and 1 to 4.5 maximum. If you take a loss, do not revenge trade. Okay, that's one more thing. Do not revenge trade. Simple. Okay, 1 loss. With each loss, cut risk in half. Okay, each loss. Okay, so with each loss you take, so obviously, like, let's say 1% per trade, you want to do 0.5 with the next trade. Okay, and then do not revenge trade. And that's pretty much it, guys. I hope you guys got some value out of this. And apart from that, what do I have? Yeah, that's pretty much it, guys. This is the risk management plan, and don't worry, do not revenge trade. Okay, just remember, this is a journey. Okay, so you don't want to revenge trade just to, and yeah, that's pretty much it, guys. That's it. To any trader watching this, I wish you guys the best of luck. I think this is where I'm gonna stop learning, because I've learned too much, and I just need to keep applying, refining, and getting better, and just overall just applying my strategy to just make money, right? Because I've learned enough to really make money. Okay, so now I just need to keep refining and back testing. Anyways, the sun's coming up as we speak. It's about almost 6 a.m. where I live. And yeah, thank you guys so much for coming by. I hope you guys found value in the strategy. Once again, if you guys want to take screenshots or take notes, whatever, you guys can feel free to do so right here. Okay, so yeah, again, shout out to GIFX for all the knowledge that I've got over the past few months, because broski, this guy had the best knowledge. I'm not even joking. Like, it has worked. The GIFX right here, I gotta give credits where credit is due. GIFX has been one of the Arjo, Casper SMC even has been like super like good in my journey. Okay, so if you guys want to check him out, 100% recommend. There was this one other guy, I forgot it, Louis Kelly. So you guys want to check him out as well. They're all brilliant teachers, and like, I don't know about their courses, but like, they're brilliant teachers. Okay, so if you guys see over here, I've learned so much from these guys, Casper SMC and all them. Anyways, guys, that's pretty much where I'm going to end this stream. I'm going to go to sleep because I have to do some like other life related things related today. But yes, we are pretty dang good, and we are hopefully profitable. Okay, see you guys.